Welcome back to Smart Stock Sam. Today we are going deep on SoFi Technologies for a full reality check. Is it actually worth buying right now? We are breaking down the growth, the risks, the insider signals, and the upside targets so you can make that call yourself. Stick with me all the way through because there is one hidden institutional metric later in this video that completely changes how you read this stock. Let me start by saying this. The SoFi you are looking at today is not the SoFi from 5 years ago. This is not a niche lending platform riding a wave of student loan refinancing. This is a full-service digital bank, and the numbers just proved it. In their most recent quarter, SoFi delivered a record-breaking $1.010 billion in quarterly revenue, a 39.6% increase compared to the same period last year. And for everyone who said this company couldn't turn a profit, they answered with an earnings per share of 13 cents, completely crushing analyst expectations. That is the kind of execution that makes institutions pay attention. But here is the real question. Can they keep it going? And the answer lies not just in what they are selling, but in how the whole system is designed to work together. Think of it like this. SoFi is not just trying to win a single financial product category. They are engineering what they call a flywheel. You come in for a loan, but then you open a bank account. You open a bank account, but then you start investing. You start investing, and suddenly SoFi is your primary financial home. They are specifically targeting high-income, tech-literate members, the exact demographic every traditional bank is desperate to hold on to, and they are cross-selling that same base across banking, investing, and even crypto. The result? A dramatically higher lifetime value per customer and a much lower cost to acquire them. That is not just growth. That is compounding growth. And you want to see that flywheel in action? Look at their member count. SoFi just hit 13.7 million members. They added a record 1 million new members in the final quarter of 2025 alone. 1 million in a single quarter. When a platform reaches this kind of critical mass, network effects take over, and traditional banks simply cannot compete for the next generation of depositors the way they used to. Now let's talk about the actual fuel behind all of this, the deposits. In 2025, SoFi saw deposits surge by 44%, bringing their total to $37.5 billion. Why does that matter? Because when you fund lending through your own members' deposits instead of borrowing at high market rates, your cost of capital drops significantly. This is the fundamental advantage of being a real bank, and SoFi is now playing that game at scale. $37.5 billion in deposits is not a startup metric. That is a serious financial institution. So what does all of this mean for the bottom line? It means the top and bottom lines are accelerating together. As SoFi scales, operational costs are not rising at the same rate as revenue, and that gap is exactly where the earnings per share trajectory starts to turn sharply upward. This company has officially crossed from cash-burning growth story to self-sustaining profit machine. And once that threshold is crossed, the entire valuation framework changes. But here is what most people are missing entirely. And I mean most people, including a lot of analysts. SoFi is not just becoming a better bank. They are building infrastructure for the future of money itself. They have launched blockchain-enabled cross-border payments via the Bitcoin Lightning Network, enabling fast and low-cost transfers to over 30 countries, and they have introduced their own stablecoin, SoFi USD. They are targeting the massive global remittance market, an industry worth hundreds of billions of dollars annually. Is it possible that a company once known only for student loan refinancing could become a core piece of the plumbing for the next financial system? Because that is exactly what they are positioning themselves to do. Now, here is that hidden metric I promised you at the top. Nearly 40% of the entire public float of SoFi stock is now held by institutional investors and hedge funds. In just the most recent quarter alone, long institutional share positions increased by 62.13 million shares, a nearly 10% jump in a single period. These are not retail traders chasing momentum. These are the most sophisticated, long-term capital allocators in the world. They are not reacting to daily price moves. They are buying a position in a multi-year thesis. And if you want to know who specifically is doing the buying, look at this. Vanguard Group boosted its stake by 6.8%, bringing its total to over 107 million shares, valued at roughly $2.830 billion. CIBC World Market increased its position by 177.9%. Fortis Group Advisors raised theirs by 94.1%. Even the State of New Jersey Common Pension Fund has been accumulating. When public pension funds are buying alongside the world's largest asset managers, that is not speculation, that is conviction. And the analysts are right there with them. Following SoFi's 2026 guidance, Wall Street sentiment has shifted decisively. JP Chase recently upgraded the stock to overweight, specifically calling a post-earnings dip an appealing buying opportunity. Citi, Jefferies, and Citizens JMP are all sitting at buy or outperform ratings. The skeptics are being proved wrong, quarter by quarter. What does the upside actually look like? Citizens JMP has a price target of $30. Mizuho is calling for $38 per share. Given that the recent 12-month high was around $32.73, these targets represent a substantial recovery toward the higher end of the valuation range. The market is starting to price in a new reality that SoFi is no longer speculative. It is a proven banking winner, and management is not letting up. They are projecting revenue growth of over 30% annually, but the number that should really get your attention is this. They expect earnings per share to compound at 40% annually between now and 2028. If you find a company with that kind of earnings growth profile, trading at current levels, with fortress-level institutional support behind it, you pay attention. As for the margins, they are expanding as the platform scales. Net interest margin currently sits at 5.85%, with an overall net margin of 13.34%. Management is targeting an EBITDA margin of 34% by 2026. This is what scaling tech economics looks like inside a financial institution. And for those worried about risk, look at the balance sheet. SoFi is maintaining a debt-to-equity ratio of just 0.31 and a total risk-based capital ratio of 22.9%, well above what regulators require. They have the runway to survive downturns and continue building. This is not a company betting the house. This is a company playing a long game with a very solid foundation. Before I give you my final take, and this is important, nothing in this video is financial advice. I am not a licensed financial advisor. Everything here is for informational and educational purposes only. Always do your own research, understand your own risk tolerance, and consider speaking with a qualified financial professional before making any investment decision. Past performance is never a guarantee of future results, and all investing carries risk, including the potential loss of principal. So let me bring this all together for you. The investment case for SoFi in 2026 rests on 5 things: record-breaking revenue execution, massive and accelerating member growth, blockchain and stablecoin innovation that most investors are completely overlooking, heavy institutional accumulation from the world's smartest money, and significant upside with analyst targets as high as $38 per share. The question is not whether SoFi is growing. The question is whether the market is still underestimating just how large this ecosystem can become. With that said, SoFi has done something rare. It has taken a niche origin story, rebuilt itself into a diversified digital bank, attracted serious institutional capital, and is now projecting the kind of earnings growth that would make almost any investor take a second look. Whether it belongs in your portfolio is a decision only you can make, but the case being made by the numbers, the institutions, and the analysts is hard to ignore. That is the reality check. If this breakdown was useful to you, do me a quick favor. Hit that like button. It genuinely helps this channel reach more people who are trying to make smarter investing decisions. And if you are not subscribed to Smart Stock Sam yet, now is a great time. We do deep dives like this one regularly, and you do not want to miss the next one. Drop your thoughts in the comments too. Are you bullish on SoFi, or do you think the market has already priced in the good news? I read every comment, and I would love to hear where you stand. I will see you in the next one.